Hey, good morning. Let's go over today's trade plan. So in the overnight session, ES slammed into the bottom of the recent range, the bottom of balance where responsive buyers were active, and we got a push back up towards the 77 to 79 area in the overnight session. And at this point, heading into the open, we've had 3 days of consistent selling, and the market is pretty stretched to the downside, but we've already gotten a buy response at the bottom of the range. So at this point, heading into the open, we're going to be watching the 76.75 to 78.75 area. We're going to use that as the micro bull bear zone. And if buyers can push ES through that zone, then that would indicate that we're getting some better buying in this market. And that can actually lead to a move back up towards the 82 to 84 and 86 quarter to 88 quarter resistance zones, and potentially even higher. If the momentum is really there, then there would be potential for a short-term reversal, and that 86 to 88 area can get tagged once again. And if the momentum is really strong, then even 91 to 93 is possible, but that's only if the high momentum reversal scenario becomes in play. And the first sign of that would be a break above 76.75 to 78.75. So as long as we have that break above that zone, and along with it we have all the other signs as well, rising internals, the NYC tick spending more time above zero, showing higher values on the upside compared to the downside. As long as all the other conditions are there as well, then we could be looking at a relatively decent bounce, just because the markets are coming off of a oversold condition. Now, in the event that we fail to get above 76.75 to 78.75, then that would actually signal continued weakness, and we can quite easily go down and fill the gap at 72 quarter, and then retest the bottom of the balance around 69 to 71. Now, that's still valid support until broken, but it was already tested in the overnight session. We've already gotten a buy response, and for that reason, the zone still calls for caution, because it would be yet another test of that zone. And the more times you test a zone, the more likely it is that it's finally going to give way. And if it does, it would be breaking below a fairly established balance area, and that can actually result in some short-term liquidation down to 62.75 to 64.75 and 57.75 to 59.75, which is a strong area of support and a spot where responsive buyers can still be active for a move back up towards the 68 to 70 range. So heading into the open, we have to be very flexible with our bias. We just have to gauge whether we're seeing some better buying stepping in. The overnight session, buyers have been dominant in all the markets across the board here. NASDAQ has held up pretty well in this pullback, over the last few days. Russell slammed into a very major high volume node in the 1110 to 1112 range and found buyers over there. So, at this point, we have to entertain the idea that short term, at least, the downside may be done, and that 76.75 to 78.75 zone is going to help us figure that out. So, off the open, we have to be open for a move in either direction, but it just calls for caution. At this point, because we're at a point where the markets could simply kind of balance at the lower part of the recent range and kind of go up to 82, 84, 86 quarter, 88 quarter, get some resistance, get some selling, balance a bit, or even go down and fill the gap, and then start getting some buying again and balance a bit before we get a directional move. It just calls for some caution. You want to make sure that you have a pretty decent trade location, or you're trading in direction of the momentum. So if you get a upside breakout, at that point you can take some aggressive pullbacks as long as the momentum is really there supporting the long side. Same idea on the downside, that if the markets really start selling off again, but they're doing it on very low momentum, then you want to be careful on trade location. But if the momentum is there and you're getting minus 1,000 to minus 1,100 tick readings, then as soon as the tick pops back up towards zero or slightly positive territory, then that could be a good way to get on board on the short side. So right now it's a very mixed market, just because it is short-term oversold. We've already gotten a bounce, and now it's just a matter of to see where the market can go from here. So off the open, let's keep an eye on 76.75 to 78.75. On the downside, gap fill 72.25 is a level that can get hit. 69 to 71 remains active as support until broken. But then if this support zone does break, or if things are just looking quite weak as the market pushes into that support zone, then we could be looking at a move down towards these lower support areas at 62.75 to 64.75 and 57.75 to 59.75. In the other markets, as far as the Russell goes, keep an eye on the 11.10 to 11.12 range. That's a major high volume node, and if that breaks yet again, then we could be looking at a move down towards the 1100 to 1102 range in the Russell. With NQ, if we can break above the 4058 to 4061 range, roughly, then we could be looking at some better buying up towards 4080 and potentially beyond. So NQ is kind of at a similar spot where it needs to either break above the 4058 to 4061 range, or we can be looking at a pretty decent sell in NQ because it still has a lot of room to catch up to the other markets. So that's how everything is shaping up. Let's see how the markets react to this micro bull bear zone in the S&P. That'll give us a good idea of where we could be headed, and we'll take it from there.